Not always. There was Bitstamp actually was getting their start in Europe in 2011, but it was too much for me. I usually like to take a flyer on risky investments, but I just couldn't wrap my head around it. So it actually took a couple of years, paid more attention in the bull market of 2013. That really tuned my interest back to Bitcoin. So I've been involved for a while, but before I sort of delved more into Bitcoin and trying to spread information about it, was involved and interested in a lot of European libertarian things. So, just going to conferences, meeting people, giving presentations, the typical thing that a libertarian does or did back in those days. Talk about the money supply, talk about inflation, try to figure out why there's this cluster of errors in the economy all at once. Typically, if businessmen, power law, that Bitcoin seems to be following. I know you've talked to Plan C and Cena and those guys from Bitcoin Intelligence who are very good. I like working with those guys as well. I guess I was the second person to discover that Bitcoin was kind of following this power curve. Not that it's a big deal. For me, it was just literally plotting something on Microsoft Excel. Giovanni, perhaps people know Giovanni. He's on Twitter, tweets a lot about that. He did that. He put Bitcoin's price in power on a log regression in 2018, I think September, on Reddit. And I put it in December on Twitter. So we kind of independently discovered it there, which was interesting. But so there's a variety of different metrics and sort of ideas and benchmarks that I try to wrap my understanding of Bitcoin around. There's a beautiful thing called Bitcoin. You can donate to me if, value for value, if you like my work. I got a BTC Pay server, my link on my website and on Twitter and everything. And that's all you have to do. So I don't have subscriptions. I know that's fine for some people, but this sort of I'm kind of the newsletter guy. That's what I'm trying to become. If you like that, then please follow. I'd be happy to share some comments and thoughts with you on my streams.
Fantastic. And I'm so happy you are with us because I love your content. As always, guys, in the description, you will find every single link. So make sure to give Matthew a follow if you haven't. And it's funny you mentioned all these people. I mean, Giovanni, we had a podcast, I think it was 3 weeks ago, and he gave me this power law lesson, literally like a lecture on the power law, which is super interesting. And like you mentioned, Plan C and Cena, we do a monthly call on the data.
Commonly in the parlance and economic textbooks would be it's a unit of account and a store of value. But those actually still, I would contend, they're not the X factor. The X factor is money. As you know, though, as you said, and George Selgin, who's an economist that I really appreciate his work, his monetary history. If people haven't heard of him, I'd recommend reading a lot of his work. George Selgin, he said, he was actually our first guest on our podcast back in 2017. And he said, fiat currencies, they are stores of value. They're just not necessarily very good. And I think that's unfortunately the reality that we're in. The other key component of all of this is that money has become monopolized by the state. And so that's what Bitcoin is trying to break. Standard definition of monopoly, the Adam Smith definition of monopoly, operated under a gold standard, some sort of a gold-backed currency, but they had no central bank. There were banks that were competing freely. They would issue their own notes, deposits, certificates, and they generally worked. And you actually found, interestingly, that the specie or the gold in the vault was not as high as what a lot of the Austrians like to say. It was never 100%. It wasn't even 10%. At times it could be down to 1 or 2% that was backing the deposits. So those are interesting tidbits of history. I just say that again, trying to put some balance to the situation. You never quite know how this stuff's going to work out. But again, to cut through a lot of the history and the information that I've just websites. But there's no APIs, I'll tell you. You can't find this on TradingView. You have to actually go and do the work. So I do have this. It's a set that I'm sort of proud of, compiling now. This is where it is. And you can actually see it's down about 20% in the last 4 years. Okay, so the peak was December 2021, right, $30.44 trillion. And now it's down to about $26.2 trillion as of March. I update this every quarter, so I'm about to start the quarterly update for year end. So it's a little bit of a lagging indicator, but it's going to brass tacks show you, the arena of where we are. And then if you're curious, how the currencies break down. So we have the dollar. It's, might be smaller than you think. And how I've always tried to just explain this to people is, you can get caught up in the hype of Bitcoin. It's great. Do it. But also understand these people have a lot of influence, a lot of money. Central bankers have a lot of power. They literally create their own money. So, they're going to work to preserve what they have. You might as well track what they have and see. That's what I do here.
I love this. Thank you so much for putting this work together. And this is how rich people get rich, right? They buy assets. And this is why real estate has gone bananas, possibly, because after all that printing, well, then what is valuable? Well, definitely not money. So you have to go into assets, right? You have to defend yourself and protect yourself into things. They cannot be inflated or printed.
We're under the 2.5 percentile. So we're in extremely, relative to the trend, we're at extremely low levels of money print. This is why Trump is so mad. This is why he wants them to print more. Again, you don't even have to look at interest rates to understand this. This is, a rising interest rates means a lowering of this money supply, and falling interest rates means a rising of this money supply. That's literally the mechanics of how they do it. So we're super tight right now, super low on the central bank money supply relative to the trend. This is an enormously strong trend. Like, this is, again, where you can say anything you want about Bitcoin going to 1 million, or we have this nice concave down, curved, sort of slowly asymptotic. It means the growth is slowly declining. As it increases, day by day, year by year, it gets a little bit heavier and the volatility gets worse. But in my opinion, since we had such huge down draws here, all right, so like, from, this is daily close, but, we did hit 1,1300 depending on the exchange here, down to 200, all right, with the 2013 boom. Same exact thing with the 2017 boom, 20,000 down to, nearly 2,000. We nearly went 90% here in 2017, drifting towards Trump right now, but or Trump is drifting towards them, I should say. But specifically with Bitcoin and and Ethereum, his World Liberty Financial, you never know what could happen with there. I'm not predicting that something bad happens, but I'm saying every time we've had like a hopium stage, a FOMO stage, there are, when the tide goes out on the next leg down, all the scams are exposed. One could easily imagine that the scams could be exposed, whether in reality or a little bit of political lynching, as they like to do if the Democrats come in, say, in the midterms. Again, I'm not saying the U.S. runs the world here with everything, but it obviously influences a lot. Who knows? Maybe there's a lot of politically connected
crystal ball, but this thing will correct, I believe, depending on how we go from now until the end of the year, right? Because if we just grow steady and slowly, maybe it will be a different beast. And like you said so well, now the asset is going from a teenager to a young man, right? Is maturing, which means the volatility is supposed to be less. I mean, still swings maybe 30, 40%, but it's not 90 as we've seen in 2011, 2013, right?
Yeah, but it remains to be seen there. I'd say it remains to be seen. And another thing I wanted to point out is we just had the money supply discussion, right? So we talked about the base money. We talked about the growth of base money. I am still of the opinion, and I may be a minority in the power curve or the power regression or power law crew. Basically, if you look at this curve as it was drawn and you stop calculating the data here in December 2016, and then you just extend it out as you can do with regressions, it would look nearly identical to the all-time curve, which is here, which takes all 15 years of pricing data, 16 years of Bitcoin data. That tells me that this is a network growing, it's being adopted, and you can visualize this with the price. And I think it's a way stronger phenomenon of what Bitcoin is doing than even looking at, say, this, which is a tailwind, by the way, and we know it's going to be a tailwind, when they start ripping out the printing presses, which we know we know they're going to do it at some point.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.